Thank you for joining us for this first-time home buyer video. We're going to talk stats and charts. We're going to talk about what's happening across the entire GTA, but more importantly, what's happening in the downtown core. I'm Brandon Ware. For those of you I haven't met before, I'm a real estate broker with Verity Toronto. I'm here with my business partner, my colleagues, Christian Matthews and Scott Cumming. Gentlemen, thank you very much. It's a lot for us to talk about today. We'll try to get through it as quickly as possible to keep everybody interested. And of course, as always, if you need more information, we are more than happy to have another Zoom call, a Google Hangout, something that we've all been doing a lot over the last number of months to dive into more of these stats. So let's start with what's happening across the entire GTA, because every month the Toronto Real Estate Board comes out with statistics showing us what's happening across all of Toronto. And these are really helpful and informative statistics and figures, but at the same time, I think they need to be taken with a grain of salt because we have a lot of information that can be very different than what's happening in the downtown core. So looking at these figures here, I've got some highlighted areas. So the media is picking up on the fact that statistically, house prices across the entire GTA are up 11.9%. Almost 12%. The number of sales, the number of new listings are plateauing about the same as this time last year. And the number of active listings or remaining inventory is down, which is contributing to some of those stories about multiple offers and bidding wars returning to the Toronto market. Days on market, what you'll see down here, DOM, if you ever hear that referenced, is about how long a property has been on the market before it sells. Economically, a lot of what we already know, which is GDP growth, unemployment. GDP growth is down, unemployment is up. We probably have a number of other headwinds that are facing the Toronto real estate market over the coming months. I don't think there's anything here that people aren't already aware of. I mean, it's really, really a very interesting market. And I guess I should also clarify, none of us are here to convince anyone to buy. We're just here to talk about the facts and the figures and provide our clients and those that are interested with information so that they can make their own decisions. We see ourselves as individuals to help the process along, to advise on where good value is, and to make sure that our clients are making strategic acquisitions. I think we would all be on the same page there.
Absolutely.
Yep. Oh, without a doubt.
Yeah. So now that we've talked a little bit about what's happening across the entire GTA, let's dive into some of those stats in the stats pack that we provide our clients or those who have requested our stats about what's happening in the downtown core. So
just to go back to that graph you just showed, Brandon, I think it's important for everybody to know that, the downtown core is so much different from what I think people hear in the media. And I think it's just why it's so important to talk to, your realtor or to us, and just a lot of the stats are so different depending on the area and the neighborhood downtown Toronto. So I think, you got to take those numbers with a grain of salt because they can be vastly different depending on where you're looking in the city. I think that's what we're going to go through now in these slides to kind of show the core, how it kind of operates differently from the GTA.
Yeah, and again, real estate is very neighborhood specific. I mean, it's important to understand what's happening across the entire country, all the economic figures and facts, and even the GTA-wide stats are really, really helpful. But what happens in Newmarket or in Mississauga versus what's happening in Leslieville or the financial district are very, very different. And despite everything that is happening in the market, it is important to understand that, can you still expect a bidding war or not, right? Yeah. And what type of house are you buying and what are the expectations in terms of future returns? So that being said, let's dive into some of these stats and explain some of them and extrapolate some of this data. So what we have here are areas that our clients are taking or are searching in. So we've got anywhere from Lawrence Park to the north, over to the beach, East York, Junction, High Park, and then of course New Toronto, Etobicoke to the west. And we do work outside of these areas, but this is where the majority of our business happens. Now, looking at over the last year, over the last 5 years, and over the last 10 years, the home price growth for the month of June, what we're seeing is, again, statistically, house prices are up. There's no disputing that. Different home segments are up different amounts. So over this time last year, if you bought a detached home for the month of June, you're up 7%, semis 16%, townhouses 1%, condos 3%. Over the last 5 years annually, you can see these kind of annual returns, which is, again, very, very good. And over the last 10 years. But I think it's important too to make the adjustments over like a smooth, because there are seasonal fluctuations in real estate. And if I skip down to this chart here, you can see these are the seasonal fluctuations that I'm referencing. In the spring and the fall, we tend to see busier markets. In the middle of the summer, the middle of the winter, things tend to slow down a little bit. But when I smooth out, or when we smooth out and we have a 12-month rolling average, you can see how over the last, here we are, 10 years, house prices, with few exceptions, which we will touch on very, very quickly, have gone up and up and up across all home types. So we've got detached, semis, townhouses, and condos. And why is this important to the average consumer? Because from our perspective, there is still long-term opportunity and growth. I'm not saying that everything is sunshine and rainbows, but I think if the purpose of your purchase is to hold real estate over the next 5, 6, 7 years, we believe, and I think I speak on all of our behalf, is that there is still value in the Toronto real estate market. Right now, we're seeing some challenges though. The rental market has corrected. I think there's still room for it to correct a little bit more. Like I said, the low-rise sector continues on its tear. We're still seeing bidding wars. What the future holds, we'll talk about quickly. And then the condo market, we're seeing a bit more inventory and prices slowing down, leveling off. And what the fall holds could be very different than what we've seen in this short-term rebound. So what we have right here is a 12-month rolling average. So this is where we've smoothed out those monthly, or rather those seasonal fluctuations. And even still, we are seeing pretty solid returns annually. Detached 4.4%. Condos, this is where everyone focuses in. 7% smooth out annual return when we, again, account for those seasonal fluctuations. Over the last 10 years, you've been seeing a 7% annual return on your investment, which is pretty good. I would be pretty happy with that, especially when I consider that I didn't pay all cash for my real estate purchase. Had I bought 10 years ago, I probably would have put down 10 or 20%. And if the property is appreciating at 7% annually, I've done very well on my investment. I think most of our clients are very happy with real estate as a vehicle to increase their net worth. But this is where it starts to get interesting. So on this chart where we have the rolling 12-month average price growth, what you'll see right here is in 2017, we had a little bit of a hiccup where the government implemented stress tests, the Affordable Housing, the Fair Housing Act, and you had rent control come in for like a hot minute. And the detached segment of the market did see somewhat of a correction. It got really, really hot. Q1 2017, house prices started to get, I don't want to say out of control, but they became very, very expensive very, very quickly. But even during this correction, if you will, condo prices, you can see, continued to go up. The month of April of this year, this is when the pandemic really started to have an effect on the Toronto real estate market. This yellow line here, you can see across all housing types, house prices for that month they dropped. And since then, we've seen them rebound. In some cases, quite significantly, like with the detached segment of the market, semis and townhouses. Condos have come back up to where the 12-month rolling average was. And again, the question is, how are we seeing things moving forward? And this is where this next statistic does play a pretty significant factor, which is the number of sales. And why is this important? Because sales demonstrates like what's the demand in the marketplace. And normally in the spring market, we'd see things surge back. That kind of got shifted as everyone was in lockdown. And the month of May and even into June, we saw a real surge in activity because everyone was in their homes, rightfully so, to make sure that we didn't spread the virus. And so across housing types, detached homes were up 6%. Sales activity, same for townhouses, semis, and condos, the sales activity was down. Looking at new listings that come to market across all home types, new listings were up, which again, we tend to see in the spring market, which again got shifted into this closer to the summer market because everybody was in a lockdown position for those few months. And now we move to probably the most interesting chart that we have here, which is sales and active listings. And why this is important is because if active listings are decreasing, it means the supply pool is less. And if sales are also increasing, it means more sales, less supply, you can expect those bidding wars. So what we've done here is we've broken down in those downtown core districts what's happening. So detached homes, less available, more sales, which is why we're seeing those bidding wars. In the semi-detached market, we're again seeing more inventory available, sales were down. So in theory, you would expect prices to be leveling off there. Not always the case, again, depending on the neighborhood. But this is the really interesting one for me, which is the condo sector of the market. And Scott and Christian, I'm going to ask you guys in just a moment, but I'm seeing prices still, they have continued to grow in the condo sector, but we've seen an 8% decrease in sales activity for the month of June 2020 over June 2019. And we saw a 43% increase in available inventory. So the supply is up and the sales are down, which means that there's more to choose from and prices haven't been appreciating quite as rapidly as they have in other home or in other housing types. Are you guys seeing the same?
Yeah, I was going to jump in there for a second. I'm seeing that the other home types, the detached, the townhomes, and the semis, I'm seeing multiple offer situations across the board. I'm not seeing that as much on the condo side like we did before the pandemic, where everything was underlisted and holding back offers. I think with more supply coming out, I think a lot of people are trying to price it what they think is market value, and I think that will continue throughout the next 2, 3, 4 months. I mean, that's what I'm seeing.
But Christian, you're doing, and just to highlight, you do a lot of work in the east end of the city. I mean, you do quite a bit in Leslieville, Riverside, Riverdale, East York. Scotty, your take, because again, I know that you've been focusing pretty heavily over the last number of years in the west end of Toronto. Let's call it Trinity Bellwoods, West Queen West. I mean, that's where you call home too. Are you seeing
for sure
in the west end of the city?
Yeah, I'm seeing pretty much the same thing. Honestly, there's quite a few listings now that are just sort of active and not necessarily getting the same amount of traction that they would have been getting in January and February and the beginning half of March of this year. I agree with Christian. I think a lot of people are listing for what they think is an adequate price instead of holding back and sort of creating that bidding war situation. It's the same thing with semi-detaches and the vast majority of sort of well-priced, well-showing detaches in this pocket. Various multiple offers. We were in one, last week with 28 offers on it. So there is quite a lot of activity in sort of that segment. But, ultimately, I think that there are opportunities to get in at good market value with regards to condos at this point. So yeah, that's where we sort of see things now.
But houses, even in the West End, I mean, great houses, unique homes, unique condos in good buildings on good streets, still selling quickly. I think it's the people that are still looking at some of these crazy prices, like we saw even a DNA phase 3. You commented months ago about how they were getting $1,300 a square foot in some cases. And I don't know that that's necessarily attainable in today's marketplace.
100%. Like we've definitely seen a pullback from those numbers in late February, as you sort of mentioned, $1,325 a square foot. Similar units sold in the beginning of June again for around $1,120 a square foot. So obviously that's a huge pullback in that segment. But those are extenuating circumstances. In my opinion, we didn't represent the buyer on that first home, and in my opinion, that was a very high price. If you looked at similar sales into the fall of last year, those would have been around $1,050, maybe $1,100 a square foot. So to see $1,130 a square foot, in my mind, it's still a good level of appreciation. It kind of shows stability in that segment of the market. But so as I said, there's just a lot more inventory to choose from right now. And I think if you do have that opportunity and are in a position, you might be able to find some of those average products, not necessarily those beautiful lofts or those super unique products, as I still believe those are selling for a premium. But those other sort of average products, there's definitely more to choose from and definitely more availability.
You made a great point about appreciation, and I would agree with you wholeheartedly, which that $1,300 a foot, not only are we glad we didn't represent the buyer, but that represents a number that was an anomaly, an outlier.
Yeah.
But looking at the people who bought in and who sold for $1,100, $1,050, $1,100, $1,150 a square foot, these are people that, even though they're not hitting $1,300 a square foot at DNA, the DNA loft building, they've still done very, very well on their purchase. Because you have to remember that these people bought in 5, 6 plus years ago and probably were paying $650, $700 a square foot. So they've seen substantial appreciation, even at prices that are back down to some degree of normal. So
well, even taking DNA3 for instance, we did 2 sales in there last year. One of them averaged $900 a square foot, and another one averaged $950 a square foot. So, you know, they were a bit more of a different layout. I would say that those 2 specific layouts would probably trade a little bit less than the average in that building. But in the same token, too, that's 1 year worth of appreciation right there. So it kind of shows that, you know, there's still good returns. And as you said, if you bought a few years ago, you still have a lot of wiggle room. You've seen very, very great appreciations both in the rental market and in the sales market. So, you know, I think a lot of our clients, and I, you know, hopefully speak for all of us, but a lot of our clients are still quite happy with the returns that they've gotten with regards to the real estate market.
So let's talk about months of inventory and supply. I'm going to move on quickly to the that supply chart that we do have. Hopefully my screen shares with you guys right now. And what you can see is, are you seeing the chart with the months of inventory here? Or is it not loading just yet?
Not yet.
Not loading just yet.
Okay, let me try that again. Because I think it's important to understand where you're buying and what's available, right? Like to get into a balanced market, we still have a little ways to go. So let's try this again and just see. Oh, here we go.
There we go.
So what we have here is months of inventory. And months of inventory, I've scribbled onto this chart here, again, in the downtown core where we're talking about these neighborhoods, these districts. To get to a balanced market, we're at 3.5 to 4 months of inventory through about 5 months. Anything less than that, we're in a seller's market. Anything here, we're in a balanced market. Anything over this, we're in a buyer's market. So here we are taking into a consideration 12-month rolling average. So we've smoothed out those seasonal fluctuations, and it takes a lot to change the needle, to move the needle in these categories this quickly. And I think it's worth noting. What we're seeing though is we still don't have a lot of supply in the low-rise sector across all sectors, frankly, but we're starting to see some increases. In the condo sector, we've gone from 1.5 to about 1.8 months of inventory, and we can get into a balanced market pretty quickly over the course of a few months. And I think that that's a real possibility in the condo sector for a few reasons over the next few months. Number one, we don't have the immigration that we had before. We don't have the international students. We don't even have that provincial migration. And without a vaccine, I don't see the government opening up the borders anytime soon. And again, I think because of that, in the short term, there may very well be a great opportunity for first-time home buyers to jump in and take advantage of prices that are even leveling off. And in some cases, we're seeing just a slight trimming of the froth on some of those prices that, Scotty, you were talking about people hitting last year.
Yeah, exactly.
So to get to a balanced market, we have to increase. But again, you can see how back in 2012 through about 2015, 2016, the condo sector was in a balanced market territory, and homes were still selling for 98 to 100% of the sale price if they were well priced. And I think that's where the biggest shock to the average seller is going to come today, which is, you know, you may not hit that ridiculous price that somebody hit 6 months ago, but you're still going to get a very good price. Buyers might not have to pay that insane price or get into a bidding war, depending on the type of home, where there are 15, 20, 25 offers. And wow, you may actually have a moment to breathe before you have to offer on something. Like, I'm not seeing the bully offers that we saw even 6 months ago. I mean, I think you guys would say the same.
Yeah, I think the biggest change that I'm seeing is that market we had back in January, February, and beginning of the first 2 weeks of March. It felt like 2017 a bit, where if you didn't buy right away, you know, you're paying 5, 10 grand, you know, more next week or next month. And then, you know, COVID hit, and then now we're kind of getting back on track. But the buyer's mindset, I don't feel is at that level anymore. I kind of feel like they're going to take their time. There's no urgency right now in the condo market.
Yeah.
What's that?
Which isn't a bad thing.
I agree. There's more, like there's more time now to go out and look at a property. You don't have to worry about it being a bully offer being put in on the first day. So I think that's a great sign for buyers when you have a bit more time to find the right property. I don't think they have that fear where they're going to pay more if they don't buy today. I feel like they feel like there's a bit more time on the schedule to find the right property.
Yeah,
for sure. And I think particularly for first-time home buyers, that's very important. You know, ultimately this is a big decision for you. So, you know, we want to try to give you as much time as humanly possible. And, you know, I would say for the past 3 years, you just really haven't had that opportunity. So a little bit of breathing room, I think, is great. I think another thing that's fantastic is just interest rates being lower. The cost of borrowing funds for you is significantly less than it even was 6 months ago. So, I think that provides a bit more opportunity for you to create wealth and build wealth for your future.
Yeah, I couldn't agree more. Interest rates are really, really low, which is great if you're trying to get into the market. And also with all of our clients, whether you're an investor or you're a first-time home buyer, I mean, we really stress the importance of having like a longer-term outlook on a housing purchase. Like, don't plan if you don't need to, or unless somebody offers you a boatload of money and you want to sell, but plan on holding this property for 5, 6, 7 years. Be able to ride out any sort of short-term fluctuations in the market, because over the next 6 to 12 months, until we have a vaccine or an antiviral treatment for coronavirus, there is going to be more challenges in the market. But I think this is very different than it has been in the past, where there is a light at the end of the tunnel. Hopefully we can mitigate some of this economic risk, the long-term effects of what's happening if we can get through this. I love all my friends and family in the US, but not the way that the US is doing it. We don't want to roll back into more lockdowns. And if we don't, then, when the immigration tap turns back on, I anticipate that the Toronto housing will rebound substantially. A few final thoughts, Scott, Christian. I probably wouldn't be buying new construction right now. I mean, ultimately it depends on your circumstances, but would you guys be looking at the new construction market?
Yeah, so I think with myself, I would agree with you there, Brandon. Like some of the prices that you're seeing on the pre-con side of things are quite expensive. And, if we're really thinking about a plateau this year, and if you're buying in 15-20% above today's current market value, you'll probably need to do a much longer hold to get comparable returns as if you were to buy resale today. The thing is, though, pre-construction is attractive to certain individuals for certain different reasons, whether it's, holding the deposit structure a little bit longer. And I know with a lot of developers now, what they're doing is they're increasing your sort of deposit structure, meaning that you can pay less down over the course of the next 3 to 4 years, which might be attractive for some people who are looking to get to, let's say, that 20% threshold, but don't have the ability or the access to have that financing today, but are confident that they'll be in a position to do that in the future. As we were saying, I think there will be opportunities, particularly in the condo market on the resale side of things, and we're sort of seeing that today. So if you're looking straight at just return, you have the capital in order to do that today. I would advise definitely go the resale market, and definitely just speak to your real estate agent about the additional costs associated with pre-construction. I know the numbers that you're seeing, or those average price per square foot that they're quoting you, may seem a bit more attractive, but when you really start to tabulate all those additional costs, if you're going to get any upgrades to the unit specifically, that number can slowly start creeping up there, meaning that the market really has to, accelerate by way of its level of appreciation for you to get that sort of same level of return. And I also think there's a lot of opportunity in buying condos that might not look the prettiest right now, in the sense that you can build a little bit more equity in there. So I'm like, if you're going to go to a pre-construction project and think about, upgrading the unit directly through the developer, you might want to think about looking at something that, looks a little bit more dated to you now, put a similar amount of money into it, and you'd be surprised at what type of product you get and the level of appreciation that you can get on that specific product. I
agree. Christian, feel any different?
Yeah, I feel it the same way. I think it really comes down to, what your goal is, and when you're buying a property. If you're an investor, and you're looking for a good return on your rental unit, that could be troubling based on the pricing and based on the way the rental market could go going forward. But if you're an end user and you want it for yourself and you're prepared to live there for 7-10 years, then it could be a good investment. It all depends on kind of what you're looking for. And to go back on Scott's comments, yeah, that price per square foot, doesn't include parking, doesn't include your closing costs. So that starts to really creep up over time. And I like resale for my clients if they're an end user, because they can go into the unit, they can see the space, they can, they know today exactly what the numbers are. It's hard to figure out the numbers 4 years down the line. So I always like to have a guess. And today I can kind of figure, if in a resale, you can kind of do the numbers as of today. I feel that's kind of a safer bet, depending on the type of investor you are.
Yeah, and I would agree with what both of you said. I think it's really, really important right now. Don't believe the hype. Do your own research. Understand where the resale market is trading versus the new construction market. I mean, we know statistically you could be paying 20, 30, 40% more than the market value. And I think in the past, when rents were going up, that justification was used quite commonly. Whereas in today's market, where rents are down 5 to 10%, depending on the building, and there's more possibility of rents decreasing even more in the short term, are your rental expectations in line with, let's call it reality, or even like a reasonable expectation when this project is going to be done in 2, 3, 4 years? Because I've seen developers throw around $7, $8 square foot rental rates guaranteed. And I'm just like, wow, we need to increase, the market value needs to go up by 10, 12, 15% annually to get there. And I just don't see that happening over the next 3 years. So there is so much more that we could dive into. We haven't touched on mortgage deferrals. We haven't touched on, a lot of other elements. We don't want to, sit here for an hour and talk about all those. We'd rather do it with each individual specifically based on the neighborhood that they're looking at. We have all of these stats for each pocket of the city. So I think we'll wrap up there. Next month, we'll dive back in again for another update for first-time home buyers. And I look forward to catching up with you guys again then.